to start right off the bat talking about the impact of rising mortgage rates on the housing market. Many people are guessing that because the mortgage rates are going up, that it means that home prices are going to start to fall, or worse, we'll have a housing crash. Well, according to the experts, that's not the case at all. Hi, I'm Betsy Taylor with Betsy Taylor Homes and RE/MAX Success, and today I'm going to show you stats and explain why housing prices will not drop and we will not have a housing crash. So let's start off with this data from Freddie Mac. Mortgage rates started out at 3.11% for the average 30-year fixed at the beginning of 2022. And they have just steadily climbed since then, up to almost 5.28%. That's the latest data as of late April. A quote from Freddie Mac says, "Mortgage rates are likely to continue to move higher throughout the balance of 2022. Although the pace of rate increases is likely to moderate, much of the increase in rates in early 2022 is in anticipation of what will happen later this year, especially with the Federal Reserve interest rate policy." So, as we look at mortgage rates rising, we are projected to see them continue to increase, but at a more moderate pace. Now, as I mentioned a moment ago, the big question people are asking is, what's going to happen to home prices as mortgage rates rise? A lot of people think that when rates go up, prices go down, but that simply is not the case. So let's look at some historical data from October of 1993, almost 30 years ago. It shows you that there was an average of about an 8% home price appreciation, even as mortgage rates were rising, and they were rising more than 1 percentage point. We know as rates rise that it tends to sometimes reduce buyer activity because some people are simply priced out of the market. But a lot of the buyers that have been looking, they just have to look at homes that are priced a bit lower than they were originally looking to buy. Housing inventory on the market and for sale today is lower than it was in January of 2021. January 2021, inventory was historically low then, so now we are even lower, much lower. Supply and demand are discussed a lot when it comes to our economy, and that in a nutshell is what drives home price appreciation. So when we think about home prices and home sales, we also have to think about buyers. Are they still out there looking to buy? And based on the data by showing time, the answer is a resounding yes. Showings right now, as of this video, exceed where we were pre-pandemic. So when you see headlines about a softening in home sales now, it's not because of rising mortgage rates. It's because there aren't enough homes for buyers to buy. Buyers who want to buy can't find, or they can't get into a home because they're being beaten out by higher and possibly multiple offers. Home prices are projected to continue to rise. The number of homes for sale on the market is still very low. So the National Association of Realtors is saying, while short-term interest rates will push up mortgage rates, they expect some of this impact to be mitigated eventually through lower inflation. Thus, they expect the 30-year fixed mortgage rate to continue to rise, although it's not going to be the big jumps that have occurred over the past few weeks. So what is this all saying? It's saying that inflation is driving this increase in mortgage rates, and they expect the mortgage rates to continue to rise, and that's what everyone has been saying. I've been sharing with you what the experts are saying, but it won't be quite as rapid pace as what we've seen over the past few weeks. So that is good news. Freddie Mac is saying, history suggests that when rates rise, there is an initial bump in home prices as many move quickly to buy a home before rates increase further. But after that period, home prices slow. Freddie Mac analysis shows that a 1% increase in mortgage rates results in a home price appreciation that is 4 percentage points lower. So for instance, a 1% increase in mortgage rates would change home price growth from 11% to only 7%. So still appreciation, a very strong appreciation. So Freddie Mac is saying that home price appreciation will slow but not drop. Higher mortgage rates will slow some of the frenzy, but for those of you that have been worried about it or wondering when the big drop will come, none of the experts are really talking about depreciation. So they're talking about a softening, a deceleration in housing prices. And they think that that's going to help slow some of the craziness that we've been seeing as we move forward into the housing market in 2022. Mike Simonson from Altos Research said it best. He said, "We keep watching for it, but there are absolutely no signs of the market slowing down anywhere in the data. If anything, we're seeing the market continue to heat up." Now let's look at the traffic maps. NAR just came out with the most recent buyer and seller traffic maps. As you can see with the buyer traffic map, with very few exceptions, you can see very strong buyer traffic across the entire United States. So anytime we're in this type of market and we have strong buyer demand, the lack of sellers keeps that upward pressure on prices. Fortune magazine just came out with an updated forecast, and they say that more industry insiders are throwing out their previous forecasts and replacing them with more bullish short-term looks. Some experts say the 2022 spring housing market might go down as one of the most competitive on record. We simply cannot reach the market potential for homes because we don't have the number of homes to be able to sell for the number of people that want to buy them. Anytime we're in this type of market and we have strong buyer demand, the lack of homes on the market keeps that upward pressure on prices. Interesting side note, back in the 1970s and 80s, there were more homes built and completed in this country than there have been in the last 14 years. This is mainly because of the housing crisis in 2008. Builders are being hit extremely hard by building material costs and have been building back slowly to their capacity since 2008, so that they have not been able to bring in as many new builds. So not only is the lack of resale homes part of the issue, but so is the lack of new build homes. The other big concern for a lot of consumers this spring is inflation. Everything is costing more, from milk to TP to gas for your car. I filled my car the other day and it was over $100. I'm sure many of you can relate. This is a graphic that shows home ownership as a hedge against inflation. And that's what I want to be able to show people. When you're in an inflationary economy, you want to be invested in hard assets that outperform inflation. And this graphic is going back all the way to the 70s, probably before many of you watching this were actually born. The blue bar is the inflation rate, and the green bar is home price appreciation. And you can see that most decades, home price appreciation outperformed inflation. So while they may be thinking you should wait for home prices to go down or for the market to crash, I would suggest you take a look at the facts and listen to what the experts are saying. On average, they are showing that home price appreciation for 2022 will be on average around 6.7%. Zelman is saying 3% and CoreLogic is saying 9.6%. But every single expert source is saying there will be appreciation as we continue through 2022. No one right now is forecasting a downward trend in prices. So now really is a great time to buy before the continued appreciation of prices. If you bought your home more than 2 years ago, you have been gaining equity at a rate over 3 times what was predicted. So if you've been thinking of selling, now is also a good time to sell. If you have any questions about this video or real estate in general, reach out. I'm here to help. I'm Betsy Taylor with Betsy Taylor Homes and RE/MAX Success. Thanks for watching. And remember, I get client-focused results that move you.